Welcome, everybody, to a sunny January 13th. Scott Riley, the market update desk with Mortgage One NMLS 157524. Well, we got a much anticipated inflation reading today, the CPI, Consumer Price Index. Now, if you remember last month when we got, or I should say, when we finally got the CPI numbers for when the government was shut down, a lot of economists poo pooed it, saying, oh, the number's not really that reliable. There was some imputed information due to the shutdown. So there was a little bit of nerves on where today's number would come out. What did we find out? Well, sometimes the real number is the real number. So we had headline CPI come in at plus 0.31%, basically right on estimates. Year over year stayed at 2.6. In fact, a non-rounded number 2.68. Core actually came in better than expected and up 2.4% or 0.24%. That was a tenth lower than expected. And year over year fell to 2.6 from 2.7%. Now, what a lot of people aren't computing in this or understanding is or I should say, finally, the downward pressure we're getting on inflation from delayed shelter costs. So this month's numbers came in at shelter was up 0.4, and year over year came in at 3.04%, which is down from the previous reading of 3.17%. This deceleration in shelter costs, specifically on owner's equivalent rent, is helping these inflation numbers. And this is something that realistically we're just on the first portion of the shelter cost coming into at least closer to real-time numbers. Real-time numbers are actually lower than what we're getting within these readings, but we're now starting to have the effects of it, and we're having positive downward momentum on inflation. Now, the nice thing is with these CPI numbers, a lot of this numbers in effect is going to roll into the PCE report later this month. So hopefully we'll have a positive report from the PCE also. We also got a National Federation of Independent Businesses Small Business Optimism report. Just a small tick in the positive direction. The index went from 99 to 99.5. So basically flat. Now, we did see plans to hire fell from a rating of 19 to 17. Shows yet another data point to a challenged or weak labor market. Now, one of the pressure points we're seeing is in oil. We're seeing a little bit of a pop in oil, 3%. It's bringing the per barrel cost to 61.46 as I look on the ticker right now. As I was driving into work today, I think I saw gas at 310. Wow. Only, a week and a half ago, we were at about 255. Now in Michigan, we did have an adjustment the first of the year to the gas tax, which did raise it, but this pop in oil is having a little bit of an effect. On stocks today, specifically, JP Morgan started positive in the day, upwards, because they are showing a beat on fourth quarter for their earnings. Now, we have seen since then a pullback on specifically bank stocks because some of the things President Trump is talking about, capping credit cards at 10% interest, that is having a negative effect on the banking sector. 10-year Treasury, we pulled back a little bit on yields today, which was nice. We're at 4.16. Still in that very narrow trading range of 4.11 to 4.2. We'll look to see how tomorrow's producer price index report affects the 10-year Treasury. It's a great time out there. We've got, as I'm looking out, a ton of sunshine, which is rare for West Michigan. It's a great time to go look at houses and give us a call. We'll help you get pre-approved, review programs and options for you. 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Take care, everybody.